Hello everyone and welcome back to the Option Writer. What I wanted to do this weekend is just kind of go over where we were in the market this week. It's been a big week, at least this earlier this week with the major sell-off that we had, kind of breaking the back of this bullish upswing that we've had over the last month. And then also take a look at some of the chart patterns I see happening in the market, particularly a head and shoulders top that's starting to form on the S&P 500. So getting right into it, now this on your screen here, this is a chart that we posted earlier this week. I think it was around Monday or Tuesday, right before the market kind of rolled over. And what we're pointing out here is that there was very, very clear bearish divergence on the indexes, and this is the chart of the S&P, and you can see that the market was continuing to go higher every single day throughout the week, throughout the month, just churning higher here. But yet the momentum of the market, or the RSI indicator that we have down here, had kind of flattened out, meaning that even though the market was moving higher, momentum, or the extent to which the market is moving higher, was really starting to turn already. And this is a really good internal indicator that we love to use here. Again, it's the RSI indicator. So when you see the RSI flatten out like it did in July, or even take a nosedive, which is sometimes going to happen, it'll start to go down before the market turns, then you know that's a very, very clear sign of bearish divergence, meaning that the market is way inflated and that at any point it could crack and break down. Ironically enough, this just happened to be the post that we put up the day before the market made its turn. So again, that's just something to think about. Always take a look at these internal indicators, even though the market's moving higher, and this also works in the downtrend as the market's moving lower. These indicators may already start to turn up, and that's bullish divergence. So taking a look here at the S&P, and I'm actually looking at the SPY, which is the ETF for the S&P, we have a very clear head and shoulders starting to form. Now there are two right shoulders on this particular ETF. A couple of the other ones don't have as defined right shoulders. But here's the basic overlay of what's happening. We have a very clean neckline here from these bottoms in February and July. Very clean neckline. A very defined head up here at the top of the market in April. And we have these shoulders here that are all lined up in a row, and actually it seems like these right shoulders here are a little bit lower than the left shoulder back in the beginning of 2010. So what that's all signaling is that the market has already come through its topping process. It's starting to make its downward trend. We're definitely in a downtrend now that we have a lower low and a lower high in the market. Now that we're making this downtrend, the market could easily fall back down to this neckline and below over the next couple of months. Now the measured move for a head and shoulders top like this on the indexes would take us down to around 85 or 850 on the S&P. That would be bringing us back down to the bottom that we had back in July of 2009, a pretty substantial sell-off. Now these patterns always don't work out as we all had hoped, but it's definitely something that we want to consider in our trading. We definitely don't want to be trading on the long side right now. We want to be looking for short opportunities, at least over the next couple of weeks. As always, we hope this is helpful, and happy trading.